Hi guys, Piotr here, it's LiteFinance Global YouTube channel, and we are going to make a little bit of the summary when it comes to the price action trading setups. I'm going to summarize what we were discussed quite a few times already, and I'm going to maybe add some interesting stuff as well, interesting for you. So guys, if you don't mind, just push the like button. And okay, without a further delay, let's start, jump, and I'm going to try to explain the things I'm looking at, especially when it comes to the day trading. Okay, so overall, as you probably remember, when I'm using the horizontal lines, right? I love to see some kind of the failures, especially when the market is going down and breaking through some support line, right? Because it's working as a support. We are falling, so this line might work as a support. And if we have some significant close, then I'm looking for failure on the retest of that broken support, now turn to resistance. And for example, on the higher time frame, I like to see even single candle with the upper shadow. All right, and completely opposite if we have the rising line, rising market, we are breaking through resistance, all right, then I like to see some kind of the pullback retest before the market will go higher. That's the one of the thing I'm looking at, and in that case I really love also the attempt to get back below and retest. And of course, that's why I'm waiting. I'm not jumping into the bandwagon immediately after the move to the upside. I wanna see what is going to happen during that retest, right? It's some kind. This pullback is working for me as a filter because. First and foremost, if the price action on the smaller time frame is going to confirm my entry at that level, then my stop is very tight, so risk reward ratio is great. And very often if market is not able to hold higher and we are going to see just the big move to the downside, it's simply avoiding the trade. So that's some kind of the filter. But what's interesting when it comes to the lines, in that case horizontal lines, but overall when it comes to the lines, I'm not sure if you noticed if it's something in your arsenal. If you are trading the rising trend line or falling trend line, is gonna be very similar, and the market is doing like this. I like to see attempt to break. Also, when it comes to the rising trend line, I wanna see something like this. Similar situation to what we discussed a second ago when it comes to the horizontal line. In that case, if we are holding the line, there is pretty big chance we are going to make new higher high compared to from where we move down to test the trend line, etc, etc. That's the thing number one. On the other hand, it's a little bit tougher, and it's very often killing and both longs and shorts when it comes to trading the broken rising trend line, right? Because very often, if you are going to see, we are under the trend line but moving higher and higher and higher than what you wanna see before joining the party to the downside. You may wanna see again the failure around the top of that trend line, and then on the smaller time frame, using the price action, smaller time frame using for the entry, and then probably this type of the action, right? The same thing it works with the falling trend line, and when the market is trying to move higher, failure, and we may try to join the party to the downside. Maybe I'll try to visualize this for you. That's the falling trend line, right? Market is trying, and if I'm going to see upper shadow, that's what I like. Don't forget what we discussed previously when it comes to the possible swing high, because we might be first time, we might be stopped out, right? But then if you see another attempt to go higher within the next hour with the failure, right, and with the close below the trend line, you may want to trade either immediately, right, or you may want to scale into your position with the classical swing high trades. So that's another thing. The next one, when we are trying to summarize, is head and shoulders, and I know that each of you or many of you love the trade head and shoulders, and well, me as well. But if I'm trying to be on the short side with the classic head and shoulders, I'm trading a little bit different. All right, I wanna see this type of the price action, and that's my entry, right? If the price is going to test the neckline, right, I'm already in profit. I can manage my position properly. Of course, very similar situation when it comes to the inverted head and shoulder, right? Very similar situation. I wanna trade the retest. So it's, as you can see, very similar to what we discussed on the beginning when it comes to the horizontal line. This time it's the classical head and shoulder pattern or inverted head and shoulder pattern. One more time, head and shoulder pattern, inverted head and shoulder pattern. Now with the head and shoulder, I really prefer trying to trade against the head and shoulder. And we were discussing this as well. Let me remind you, in case of the head and shoulder, and once the market is trying, when the market is trying to build the right shoulder, right? If you are going to see some hesitation, and if you are going to see that there is a possibility that we might form some kind of the megaphone formation, that's what you are looking for. And again, your first target is going to be the level related to the top of the left shoulder, right? But once we are going to break, you might see big powerful move to the upside, and then when you are trading the regular head and shoulders, then you are measuring the distance from the top to the neckline, and that's what you are trading. Once we are breaking to the upside, you are placing this distance but to the opposite side. There is also a little bit more conservative approach how to trade the failure of the head and shoulders. You want to see the strong rally, you want to see that the market is taking out that what was supposed to be had, right? After this creation of the megaphone formation over here, you want to see strong rally, then you are connecting right on the left shoulder and buying the pullback, right? And of course, a similar situation when it comes to the inverted head and shoulder. Also, what I like to trade is the range breakout, especially the Asian hours, or in case of the day trading, some early open of the London or New York. In that case, depends on the range, what you want to see. You want to see the move to the downside, depends on the price action on the smaller time frame. The broken bottom and the 50% of that range should work as a supply, especially if previously market was in a downtrend, and of course it's gonna be very similar to what we discussed when it comes to the uptrend. Now finally let's try to have a look if we can find a few of that things on the chart, just just to have something in place for you to work with, right? In case of the market going down, when it comes to the downtrend line. You can connect the dots. You've got your lower highs starting lower lows. Market was trying to move back above trend line, got back below, and as you can see, I'm going to show you, as you can see, there was a possibility to join the party twice, if I'm not mistaken. 1 second. Yeah, just 1 second. Show you. There was a possibility to join the party twice, especially with this rising candle and upper shadow. Now, it is also related to the latest market strength and latest market weakness. In that case, as you can see here, right, this particular breakout, this candle was bullish as long as we haven't seen the close below. Once we seen, look what happened. We were trying to get back twice, and we've seen the upper shadow. Something in addition when it comes to the build your trading arsenal. What next? Well, let me try to have a look what we have. There was, of course, another attempt to go higher over here with the classic stop hand in place. So there was a possibility to try to trade immediately after the early close. That's what we discussed at the very beginning. Let's try to check another chart if there is something for us as well. For example, well, that's supply, right? Move to the downside. Market was trying to go higher, classical stop hand, upper shadow, trading to the downside. Right now, once we are taking out some kind of the latest supply, then it might work as a demand, right? If you do remember, we were discussing this chart when I've been talking about the dollar yen. There was a supply, we broke to the upside, right? We broke to the upside, and we were discussing the levels close to 109, 15, 109 might work as a possible demand at least at the very beginning, and that's what happened. Even more, for some of you, there was a classical double bottom, and for the rest, it was the stop hand, quick move to the upside, retest, and that was the eventually, if you do prefer this style, that was the buying opportunity. And again, classical stop hand, upper shadow, and to the downside. Let's have a look what we have when it comes to the next chart, and I'm gonna to use all we discussed today. I'm going to use to prepare bigger and deeper euro-dollar analysis in the near future. So pound is also doing well with this type of the trading. Classical attempt to go higher, upper shadow. You may want to wait for the retest. Classical stop hand trade as well. Once market broke through the latest supply, there was a move higher, retest of the demand, and significantly higher. Then, of course, trying to trade the trend line, bull flag, retest, significantly higher, etc., etc., etc. With that being said, guys, it was my pleasure to make this special summary, this wrap up for you, so we have all those things in one place. and if I'm going to get back to you with the euro-dollar analysis, I'm going to use these tools again. With that being said, wish you great trading day. See you around, take care and goodbye.